Hey everyone, welcome back to Corporate Decoder, the place where we unpack the biggest stories in business and finance. And let me tell you, BNB plus Corp has quite the tale to tell in this latest report, a tale of pivoting from DNA to digital assets with more twists than a pretzel. And before we dive into the nitty-gritty, if you love getting these kinds of straight-shot analyses from SEC filings, make sure you hit that subscribe button. Also, we have an amazing community growing on our Discord server, linked in the description below, so come join the conversation. This is BNB Plus Corp's annual report for the year ending the 30th of September 2025. Now, this company has undergone some massive changes. They used to be focused on DNA tagging and security products, and even clinical lab testing, but they've completely shifted gears. Their big play now is becoming a digital asset treasury, and they're putting all their chips on BNB, the cryptocurrency associated with the Binance exchange. They want to accumulate a whole lot of BNB and use it to make money, like earning interest or rewards through various digital finance opportunities. Let's look at the numbers from their financial statements. For the fiscal year ending the 30th of September 2025, they reported a net loss per S-share from continuing operations of $134.23. That sounds like a lot, but remember, their stock went through some big split adjustments. So comparing directly to old numbers might be tricky. Their total revenues were about $2.1 million, a slight increase from the previous year, but it is their expenses that really stand out. Their total operating expenses reached over $16.8 million for 2025, a big jump from about $14.6 million the year before. A huge part of this increase was an almost $2.5 million rise in research and development expenses. This was largely due to a write-off of about $2.7 million of intangible assets they acquired previously. They decided a certain part of their old biotech research project, the LinearNAP enzyme, was no longer worth pursuing. All of these factors combined led to a loss from operations around $16 million for the year, which is an increase from about $13.6 million the prior year. It is clear the company is investing heavily in its new digital asset strategy while also trying to wind down its older businesses. Now, they've been raising money to fund this big shift. In October 2025, they closed a private placement, bringing in about $26.8 million in cash and cryptocurrency. They also have the potential to raise another $30.8 million from warrants being exercised. This influx of cash is crucial for their digital asset treasury strategy, which they are actively building out. But this transition is not without its risks. Take a look at their risk factors. They openly admit they might not successfully implement their business strategies, especially their digital asset treasury plan. They also point out that sales of their common stock could really push down the stock price, and that their management's investment choices, especially with the proceeds from any further offerings, might not pan out as expected. And then there is the huge risk tied to BNB itself. They mentioned directly that BNB and other digital assets have seen extreme price swings, and this volatility could absolutely wreck their business. They're relying heavily on BNB, and if its price plummets, their whole strategy could be in serious trouble. Think of it like betting your entire company on one horse, and that horse is known for unpredictable races. They also highlight a significant risk BNB and the BNB chain have strong ties to Binance, the cryptocurrency exchange, and its top people. Most of the BNB out there is reportedly held by Binance's founder, and any actions they take, like selling large amounts, could massively impact BNB's price. Plus, there is always the worry that regulators might look at BNB as a security, leading to even more restrictions. Let's talk about the leadership. In November 2025, Joshua Kruger was appointed chairman of the board. He's got a background in digital asset management and tokenomics, which fits their new strategy. However, the report notes he is not considered independent, partly because he is affiliated with companies providing services to BNB Plus Corp, and these services add up to a significant amount annually. This raises questions about potential conflicts of interest. Speaking of services, they've entered into a pretty significant agreement with Cypress LLC for discretionary asset management of their digital assets. This company, Cypress LLC, is also connected to Kruger and Patrick Horsman, who is now their chief investment officer and affiliated with Cypress. They'll be paid management fees and an incentive fee based on returns. This heavy reliance on related parties for critical functions is definitely something shareholders should watch closely. Diving into their balance sheet as of the 30th of September 2025, we see total assets of about $4.4 million, a big drop from over $12.7 million the year before. Their cash and cash equivalents also decreased to around $1.6 million from over $5.8 million. Their liabilities are also pretty high. with total liabilities around 2.4 million in 2025, which is lower than the previous year, but still significant given their limited assets. And if we look at their equity section, the accumulated deficit is a staggering $379 million. That's a massive hole, showing how much they've lost over the years. Even with recent fundraising, their common stock issued is just over 1.6 million shares in 2025, a huge jump from just 13,755 shares in 2024. Reflecting all those new shares issued during their fundraising, the report also shows a significant deemed dividend related to warrant modifications, totaling over $54 million in 2025. This really blows out their net loss to common stockholders, making the per S hair loss look astronomical, over $134 for continuing operations. This indicates a hefty dilution effect from those warrant adjustments. In terms of liquidity, the company states they believe they have enough cash and cryptocurrency to stay afloat for the next 12 months, thanks to the recent funding, but the recurring net losses and that massive accumulated deficit are undeniable indicators of the challenges ahead. They are heavily counting on this new digital asset strategy generating significant returns, which is a big gamble in a highly volatile and uncertain market. So, what is the verdict on BNB plus Corp? They're in a high-stakes gamble, betting the farm on BNB. Their pivot is bold. But the risks are enormous: extreme crypto volatility, regulatory uncertainty surrounding BNB, and significant reliance on related parties for management and strategy. Their past biotech focus is largely being abandoned, and the success of their new venture hinges on their ability to navigate the wild world of digital assets and generate yield effectively. It is a story of transformation, but one that treads a very precarious path. What do you think about this company's bold pivot? Are they pioneers, or is this a recipe for disaster? Let me know your thoughts in the comments below. If you found value in this deep dive, smash that like button. It really helps us out, and subscribe for more straight shooting corporate analysis. And don't forget to join our Discord community for more great discussions. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.